Hello, investor and trader. Welcome back to an episode of Live Day Trading Recap. Now, just kidding, it's not about that. For the past 2 weeks already, I have not day trade. I do watch the market on a regular basis, like every day, with my group of buddies in a conference call, right? And I can hear them trading left and right. Meanwhile, I'm just sitting there and looking at the stock price move up and down and looking around and stuff like that. Well, meanwhile, I cannot, find a good setup. I look at other alternative like swing trading or investing, right? So in this video, I want to share with you guys two stock I recently purchased or sell, in other words, sell cash secure put, meaning I'm okay or agreed to buy these two stocks. So I'd like to disclaim that I'm not a financial advisor or a stock guru or even claim to be one. I'm just a random guy on YouTube that loves to trade stocks and invest in the stock market. All right, let's get into it. So if you recall my last video that I am buying, I refer to Best Buy. I did a cash secure put around 97, right? Around almost $50,000 cash secure put. Now you can see it's gone up a little bit ever since then because, like I said, this stock is undervalued fundamentally. You can see right here, there's a big ass gap right here, right? So eventually, this stock, in terms of the technical wise, the charts, it will get filled eventually. It's just a matter of when. Could be next quarter or next quarter or end of the year, but who knows? But from 100 to 140, that's a 40% increase. That's a pretty good return if you think about it. So yeah, that's that one. Then yesterday I did cash secure put on Facebook. I did 4 contract. So here's a screenshot right here. Here's a monthly chart. As you can see, I am buying cash secure put, by the way. So I've made a strike price at 330. That's due February 18th, which is like another month from now, over a month. So I did 4 contracts and I collected 5,400 in premium. Well, I want to play a little bit safe, so I decided to use that premium to buy put 325 on the same expiration date as this one, so that just in case if Facebook decided to go, tank below 330, like 315, even 300, I will also making money either direction, in other words. So that's what I did here. Now let me go to here real quick. So this, if you watch my buying, the stock I am buying about Best Buy, this is the thing I kind of follow in terms of the fundamental. Now if you recall, right, not last year, well last year, there's a lot of stock that are on discount right now. I'll give you some example, like Teladoc. Teladoc has been falling for the past year, pretty much right since March 2021, and it keeps falling. Do you catch this knife? Well, it depends what is the time frame that you have. Like you have the Cathy Wood time frame, 5 to 10 years, or you want to make a quick buck, or a couple of weeks or whatever. You know what I mean? But in general, this stock right here, fundamentally, again, in my opinion, fundamentally, this company fundamentally is not my cup of tea. I would trade it, but I would not sell cash secure put on this thing because if you look at it, it keeps on falling. What's the point of catching a falling knife when it keeps on falling, right? Just let it fall. There are two type of falling knife: dead cat bounce and rubber ball, right? A dead cat bounce like this, bounce, back down, bounce, back down. That's the stuff you want to avoid. And there's a rubber ball. A rubber ball is like this stock right here, Facebook. Now a lot of people don't like Facebook because of Mark Zuckerberg or Zuck the Cuck. Yes, I don't like him either, but fundamentally the company is like a cash cow. It has so much cash, and the valuation wise is really attractive right now because the PE ratio right now is like mid 20s or low 20s compared to Amazon and Google and Apple or Microsoft. You know what I mean? So every pullback, as you can see, let's go for about 10 years on the monthly chart, or even 10 years fine. See this little pullback, bounce, pullback, bounce, pullback, bounce, pullback, bounce, pullback, bounce. I think you get the picture, right? Pullback, bounce. These are known as rubber ball bounce. Why? Because the fundamental is rock solid. So every single time this thing pull back, I would love to nibble some shares. So that's why I decided to do cash secure put on Facebook. That cost me 130. No, what the heck? My bad. That's Adobe. That's not Adobe Next. Cost me 132K. So the next one I did cash put again. The next one today is Adobe, and I collected 5,700 in premium. So let's go to Adobe. I did 2 contract only. Dude, that stock is expensive, man. I can't do more. Well, I don't want to do two, go crazy with cash secure put. I need to save some cash for reserve, for like in case the market want to pull back more. So I only go light, only two contract. Collected 5,700, like I said. So let's go to Adobe. Again, Adobe is one of those rubber ball bounce. Every pullback Adobe does, it tends to bounce. Now again, this is the monthly chart. See, pullback, bounce, pullback, bounce, pullback, bounce, pullback, bounce. Now it's the pullback, the retracement. That's where I want to step in. And now also, have you noticed here, for the past several years already, it's even back to here. You see that? You can see it not right here. It tends to bounce, or once in a while, it touched this blue moving average, which is the monthly 20 EMA. See, it did right here, it did right here, it did right here, well, almost right here, now it's right here. So that's why I decided to sell cash put at 515. Pretty much in the money, right? But I have until March 18th though, as you can see. So I have like pretty much 3 months for this thing to bounce. Now, if it doesn't bounce, I'm okay with it too. That's why cash put is for, right? You are agreed to buy the stock where a strike price you selected. I selected 315. So I am expecting a bounce. If it doesn't bounce, that's okay too. That's why you don't want to go all in, right? You got to save some money on the side just in case it fall all the way down to here. 400. Can that happen? Absolutely can happen. Who knows, right? Because if you think about it, the QQQ, it has been run up pretty crazy in 2021. See from here to here. So we're starting 2020, right? This right here is, I would not say normal, because normally, 18 months, you watch Peter Lynch, right? We normally have a good correction, about 10-20% correction every 18 months to 24 or 36 months. If you can see right here, there's no major correction. These are just minor little correction, like 5-10%. I'm talking about over 15%. We have not had that yet. So I would not be surprised if QQQ, or the over index, decided to pull back down to here, or even down to here. Because you look at the bigger picture, like the monthly chart, the yearly chart, yeah, it gets very scary, right? Just look at this thing. For the past, years, since 2020, since 2006, you see this line, this moving average right here? Now this is a yearly chart, okay? The big ass time frame, or high time frame. It tends to hover or like to touch it, you see? But look at where we are right now. We're like way far above it. So I would not be surprised 2022 the Q decided to give back some of the gains from last year. I'm talking about this year right here. At least fall down to here or something, or even down to here. So do not be surprised if that does happen, because the Fed did say that they want to raise interest rate and stuff like that. And that's how all these high-flying tech stock got killed recently, right? Like, for example, one of them is Peloton. I mean, just look at this thing. From 170 down to 32. Now, fundamentally, this company, like I said in my last video, you haven't seen this video, is it a buy or not? When that stock was like 55, I said do not buy it. And look what it is right now. It's at 33. I still think it still can fall. If you watch here on the monthly chart, this candle kind of like a giveaway. It's like a big ass red candle, and of course lower high and lower low. Another one is Hood. All these high growth flying stock, especially from the ARK ETF, are getting killed right now. And these premium are very nice, but I just could not sell cash secure put on the stock because fundamentally it's not a strong company. It still has a lot more to prove to Wall Street. Because what I look for, what I mean fundamentally, I meant like this right here. Income statement, cash flow, operation expenses, and stuff like that. So this is Facebook right here. You can see, right, revenue increasing like all these years, net income increasing over the years, like 10-year record. Cash, look at that thing. This keep on increasing. Debt, like I said, I like to invest in a company that has low debt or reasonable amount of debt, not crazy amount of debt like Ford. Ford has high debt. That's why I'm not buying Ford. And as you can see, Ford took off already. Now I'm kind of go off topic here, but you get the idea, right? I like company with low debt or reasonable amount of debt. Operating cash flow, net income, all increasing, or at least increased, over the years. This is why I like. This is what I meant by fundamental. Robinhood, they don't have any of that data. It's still relatively new. But bless those souls that bought this stock in the 70s and 80s, because right now you are not a happy camper. Next one, for example, is a C. Same thing for this stock too. I call this another Corona stock. It just took off like crazy. You just think about it, right? 2020 to 2022, early this year, from $20, $30 to $40, all the way to 400, 10x. Had this company increased its 10x in revenue, net profit, and all those good shebang? No, it's not. That's why it's this pullback right here. And you want to sell cash put on these yet until you find a reversal, or at least a confirmation and a reversal. Because who knows, maybe it could fall down to 100. I don't know, right now it's like a falling knife. The next one is SDC, Smile Direct Club. Very popular among YouTubers. I've been watching this like for months already, ever since it got so popular in YouTube. I'm like, what's so special about this stock right? I don't want to disrespect anyone as whoever had this stock. I don't see anything special in this company at all. If you look at the big picture, yes, there are people that are waiting for a massive short squeeze because this stock is heavily shorted, but I don't see no short squeeze yet. I don't know if it's gonna be the next GME or not, but yeah, it just keep on falling. So there's no point for me to buy cash secure put in this thing, And again, I rather have this stock right here, direct competition. ALGN is direct competition against SDC, as I mentioned in my other video. Now this stock, I would definitely buy cash secure put because this stock has strong fundamental. Let me find it real quick and show you guys. I gotta go here, and right here. There we go. This is ALGN fundamentally, fundamental stuff. Now this is a shortcut. Just a bunch of graphs, but the numbers speaks for itself. If you want to dig more into it, and I think I mentioned in my last video, if you really want to dig in the numbers, I highly suggest to go here. Simfin.com, and it has like 10-15 years of record. You can see the revenue increase and stuff like that. Now this example is TSP, Jack in the Box, but I just want to make it easier for the viewers just to look at charts, bar graph. You can see ALGN, direct competition with SDC. Look at this thing. It's revenue increasing over the years, and look at this. They have net income. They're actually making money. And of course, cash to debt, they had almost zero debt. And look at this graph. Oh my gosh, it's so beautiful. Now this is the company I would happy to sell cash secure put on any major pullback. Now let's just see here. Is there any major pullback yet? Well, let's put them back right now. It'd be nice to sell some cash secure put around 500. Some right here, or even down after that, some right here. Ultimately, be nice to sweep up some shares right here. I don't think it'll fall that much though, but who knows, right? Who knows? But yeah, that's what I look for when I do cash secure put, or when I want to invest in a company. It has to be strong fundamental for me to do that. Weak fundamentals or hype up stock, I prefer not to do that. Now you do what you like. I'm just showing you my idea what I like to do. Remember, there are two types of bounce: dead cat bounce and rubber ball. Make sure you catch the rubber ball bounce, not the dead cat bounce. All right, see you guys in the next video. Bye.